Hello all and welcome to my YouTube channel. Today we are discussing about Silicon Valley Bank. It has been into limelight since past 2-3 days. What are the reasons? Let us discuss. Silicon Valley Bank is a commercial bank known for its unique way of lending to tech startups, life sciences companies and venture capital industries. After the COVID-led era, whereby it was a low interest rate scenario, Silicon Valley Bank received a flood of deposits totaling to amount of nearly $180 billion. Post this, Silicon Valley Bank invested 50% of its amount into mortgage-based securities. Now, what are mortgage-based securities? Let us understand that first. Mortgage-based securities are a collection of house loans that are offered for sale by the banks that issued them. They are then bundled into pools and subsequently they are sold as a singular security. Cut short, market saw a huge potential to grow where brokerage houses had nearly $375 target prices for this bank till December 2023. So then what went wrong? Where market was seeing such a huge potential, what happened that the banking sector was altogether witnessing this pressure. Fed rates were hiked and then it stopped buying mortgage-based securities. In this scenario, MBS prices kind of went down and the bond rates were increased from 1.5% to nearly 7%. In this scenario, Silicon Valley Bank lost nearly $1.8 billion by selling its $21 billion worth of assets, which included the treasuries as well and the mortgage-based securities as well. Apart from this, they also had deposits worth $170 billion, which decreased from $181 billion. That was the figure that they reported in December 2021, and the figures that we are talking right now is $170 billion that was reported at the end of February. In this scenario, when we are deciding this, parallelly there is one more scenario that happened. Silvergate Bank was witnessing a huge trouble because of its strategy. It received deposits from cryptocurrency businesses and they were now demanding their money back. In such scenario, Silicon Valley Bank announced its plan to raise capital. It was nearly $1.75 billion worth capital raise, and they also highlighted they wanted to strengthen its capital condition and also showed the concern over the increasing rate scenario. At this point, it was market reaction that triggered and the comment of management about not panicking on these things was taken negatively, and also FDIC intervened and shut down its operation. Important to know, Fed would be taking steps towards increasing rates or decreasing rates, because if in case it is lowering the rate, the inflation would be triggered once again, and if they decide to increase the interest rate scenario, might be we witness 2 or 3 more banks having such pressure. But it is important to know how would this be considering towards bringing a solution to such a big problem. We have seen a financial crisis in past times, after which this is the biggest fall that one of the largest bank is witnessing in US markets.